Hello, in this market update we asked the question, is rising inflation here to stay? Our market update report gives you the latest intelligence from across the industry. In our new release we reflect on the third significant global event to hit the market following Brexit and the COVID-19 pandemic as the Russian-Ukraine war impacts the economic outlook and future inflationary pressures. In the last quarter we've seen UK economic forecasts cut as inflation is expected to reach 10% towards the end of the year, impacts consumer spending and potentially stalls economic growth. In construction, the current pipeline of work remains strong with output peaking at 44 billion in Q1 2022, bringing with it a new wave of job opportunities in April and an increase in purchasing activity. But there is also caution as the supply chain struggles to deal with increased demand alongside labour, materials and transport shortages, as well as energy price increases, putting additional pressure on construction. To get into more detail, read about it on our Market Intelligence microsite. And now I'll hand over to Rachel and Mike to talk about the data.
As we've mentioned, the data suggests that the impact of the conflict is starting to be seen, with UK economic growth beginning to slow due to the increased cost of living. The UK construction PMI rose to 58.2 in April 2022, indicating another strong rise in construction activity. However, the ongoing challenge of keeping up with this demand is lengthening supplier lead times. This, combined with commodity price increases, is putting added pressure on construction costs.
However, the underlying causes of inflation are not expected to persist. Demand for goods is unlikely to rise as fast as it has in recent months, and some of the production difficulties businesses are currently facing are likely to ease as supply chains adapt and find new production sources. However, despite the currently tight labour market, unemployment is expected to rise by 2025 due to an anticipated slowdown in demand growth. This will reduce wage inflation and also overall inflation.
Our latest tender price indicator has been updated to take account of all of these recent cost pressures and shows that while UK construction activity has returned to normal levels, the Russia-Ukraine conflict has sparked a renewed wave of input cost inflation.
But what are we seeing from the supply chain? Higher energy prices have increased manufacturing costs for many construction materials, while interrupted trade flows have created supply chain disruption which has amplified global inflationary forces. So in response to the tariffs and sanctions on Russia, global supply and pricing for commodities has shifted. This has increased risk pricing on tenders. Project viability concerns may cause a short-term drop in demand and encourage more competitive tendering.
However, suppliers are learning to mitigate against this supply chain disruption and will eventually adapt to the interrupted trading flows and establish new trading partners.
On reflection, although we've seen labour costs rising together with components and material pricings, the effect on your project will vary. We've seen the industry respond with resilience to this increase in demand and higher interest rates as they try and source alternative means of supply. This has had the effect of moderating the impact of increased prices.
If you want to find out the details behind the headlines, read about it in the full report on our Market Intelligence website. Follow our channels to keep up to date or get in touch to speak to one of our market experts today.